It's Argentina's election this coming Sunday between government-backed Daniel Sicily and opposition's Marcio Marci. It's a chance for those in Argentina to choose which path to take in order to solve the current economic woes. I'm joined now by Gustavo Rangel, Chief Economist for Latin America at ING Global Markets. So Gustavo, Argentina's government is in the middle of the most closely contested presidential election, one that's having quite a significant impact on the economy. The government is attempting to prop up the currency, pushing foreign currency reserves to a 9-year low. This is raising alarms among investors that the administration is putting the long-term health of the economy at risk for short-term political gain. Is this the case?
Well, certainly. The administration is really just trying to delay the unavoidable here. Really, FX is very overvalued. And FX has been used as a price anchor in Argentina, which has meant that it has stayed overvalued for quite some time, which has hurt a lot domestic producers, and also has created these imbalances on the external account. And they also believe that FX volatility would hurt them in the elections in November 22nd. And so they are doing all they can to avoid that volatility by basically selling reserves. So basically, it's a very difficult situation for them. Net reserves are below 5 billion now, which means that really they may have to let the currency go possibly as soon as December. So we're very likely to see some major correction there, possibly in the realm of 40-50%.
Now, all this occurs as data out on Monday showed the unemployment rate in Argentina fell unexpectedly last month to 5.9%. Many weren't confident in regards to the unemployment situation for the second half of the year. A blip in the figures then, or an indication of something a bit more optimistic?
Well, really hard to be optimistic here because what Argentina is heading into is a major fiscal correction, a major correction in monetary policy, meaning they will have to hike rates, they will have to cut spending, they will have to cut subsidies. So the outlook for economic activity is really poor. So we're very likely entering into a recession next year, so this number is possibly a blip. They do need to rebalance fiscal accounts. As I said, they do need to rebalance external accounts. Inflation is extremely high, so that is an evidence of it also illustrates the kind of imbalances that they have. So they basically heading into major rearrangement in the domestic economy, which will be certainly very costly in terms of economic activity. So next year they're probably going to have some recession, despite the fact that the election of the opposition has been welcomed by investors in general, has created all kinds of optimism with regards to the outlook of the economy for the long term in Argentina. For the very short term, what we're going to have is probably a major adjustment and certainly some degree of recession throughout next year.
Just taking a look to Chile and their GDP growth rate data out tomorrow. Chile's economic activity rebounded in September on manufacturing, rising at the fastest pace in 2 years, while subdued business sentiment and external headwinds from lower commodity price challenged the outlook for the economic recovery next year. With all this in mind, what can we expect from this upcoming data?
Well, what we are seeing in terms of Chile is that the second quarter was probably going to have been the bottom here. This economy obviously has suffered a tremendous terms of trade shock. They've also suffered from poor business sentiment domestically with the election of President Bachelet that promised to hike taxes and conduct major changes in the constitution. So they've had a lot to sort of digest. That has already pretty much taken place. So my expectation for Chile is that going forward, you're probably going to see slightly improvements in the data, economic activity data, in particular this one that we are going to see pretty soon, which should represent a slight acceleration from the second quarter, but not very much. But it really is, I believe, the beginning of a trend of better economic activity data, despite the fact that the central bank has recently been forced to increase interest rates. Interest rates level are still below neutral, so therefore it will still contribute will not be necessarily an impediment for growth going forward. So it's generally a more positive outlook. It especially reflects the fact that after years of deterioration, business sentiment is beginning to improve. And the fact that the terms of trade is unlikely to suffer much more, given that copper prices are already at very depressed levels, and prospects for much lower numbers from here are more limited. So the fact is that the economy has already transitioned, so to speak, and going forward, we should expect them to actually perform a bit better.
That was Gustavo Rangel from ING with me there, with a look at just some of the events in the Latin American market. Now, for more insight and analysis like this, make sure you keep clicking back to Dukascopy TV. Bye for now.